Good afternoon, everyone. This is Henry, and as we get into tonight's free video, I wanted to bring you something that was a little bit off the beaten path. You know, the Mag 7s have all been pretty tired this week. The market in general is a little bit questionable, but I really don't think I see a lot that I'm going to be trying to get you short, at least not from a swing perspective. You know, the next couple of sessions could definitely be down, but into the January expiration, out into March, I think bulls still have some opportunity, and that's why I wanted to bring you the idea here in IRDM. Now, most of the time, I am focused on option strategies with you to try and get the most leverage on our money, but I just wanted to share a thought process here off of the stock, because I think the math is pretty easy to speak to and may give you an idea on scaling into a trade. Because you guys know that the squeeze is going to be the foundation of pretty much everything that I do. So if we look at the current squeeze that is 5 days into formation, we can look at this previous squeeze where it was about 5 days into formation and think about how price was trading. Kind of sideways, a little bit up off of the low, kind of nondescript other than the squeeze, but I try to use this signal to get a feel for where I'm at as a moment in time. So let's say that you want to have 1,000 shares in this. Well, over the next 10 days, you pick up 100 shares each day as long as price is above the 50-day simple moving average. Then, over the course of those 10 days, hopefully you've accumulated a position, somewhere under 40, but of course above this 38.59 moving average. And then once you've got that position built out, ideally the squeeze will fire long, and if you have those 1,000 shares from 40 and move into the 200-day simple moving average, would be a good 10 points. So that's going to be about a $10,000 trade. So to me, that squeeze potential into the 200-day moving average just looks like a nice air gap to move into, and that's part of what offers good risk reward, where if we have that 10 points to the upside, I'm telling you to use the moving average for a stop, which would just be about 2 points of risk. But even if you wanted to be especially lenient and use those previous swing lows at 34.20, well, from there you're risking roughly 6 points, right? So if you use that very lenient low for your stop, that's risking 6 points in an effort to make 10. Ideally, that way of scaling in helps you get a good price. And even if you don't get your full target, as long as it fires long, there should be some money to be made in this. So I hope that offers a little variety to your watch list, a helpful name that we'll keep an eye on in the weeks ahead, and then we'll see what the market looks like after we get tomorrow's payroll data. So y'all have good trading, and I hope to see you in the room tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful. And if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.